Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. The recent spurt in COVID cases in China has spooked the global markets and left Indian companies worried about another bout of supply chain disruptions. Will Indian business be impacted, and how can India and Indian companies prepare to avoid any large-scale disruptions once again? Joining us is the newly appointed FICCI President, Subhrakant Panda, the Managing Director of Indian Metals and Ferro Alloys Limited. Thank you very much for joining us, Mr. Panda, on the show. The reason I am linking this to COVID is primarily on account of fast changing sort of sentiment over the last 2-3 days this week with respect to COVID and its impact on the Indian economy, Indian business, which has recovered to a large extent from the earlier lockdowns. What's your own sense?
So, I didn't hear the early part of the question, but I presume you're talking about the information coming out of China. And, my sense at this point in time is that we should not panic. There is a need to be vigilant, which is what is happening. In the sense that the government is on top of things. The health secretary has written to the states and other stakeholders to increase the level of alertness and do genome sequencing so that we are able to pick up any new strains if that were to happen. But the information coming out of China in the last couple of days, this is a society where news flow is tightly controlled. So you don't know whether something is either being underreported or what is escaping through is hyperbole or reality. It's very hard to tell. And things will become clearer in the next, I would say, 5-7 days or so. I believe the World Health Organization even today has called upon China to share information about what is happening. And until we have more authentic information, I don't think we should get carried away. And there is certainly no need to panic. From a Indian perspective, the population is by and large fully vaccinated with 2 doses, and a large number have got the 3rd precautionary dose as well. So we are about as well prepared as we can be. And from a business perspective, again, cyclical sectors are, have deleveraged their balance sheets to a large extent. You have a situation where there is a large reserve of foreign exchange, so that we are, which is being used judiciously, and that's about what we can do.
That's a fair assessment. I want you to dwell a little bit more on the preparedness of Indian industry. We saw the first lockdown and how Indian industry rapidly adapted to that. And there are, several lockdowns behind us, the 3rd year of this continuing pandemic. How well is India and Indian businesses specifically prepared to deal with supply chain disruptions? Because that has been something that has spilled over into inflation and caused considerable pain to a certain segment of the Indian economy.
So, the point here, as I said, first and foremost, I wouldn't want to speculate that this is something which is actually out of control until we have reason to believe so. Yes, there is, the number of cases are spiking, but we know that to happen. And, more from the point of view of the Chinese people as well as the world, I really hope that this is something which is under control. Because don't forget that, there is a business aspect of it, as I said, that, if there is a disruption, unfortunately, then, that is something that we can't really afford or want at this point in time. But more than anything else, it is the human cost that has to be kept in mind. But, what is worth pointing out here is that our own track record of how we handled COVID has been far better, both in terms of, whether it was having a lockdown at the beginning when you didn't know what was going on, to a very well conducted vaccination campaign, and finally a calibrated reopening which balanced lives and livelihoods. And I'm aware of that simply because I headed the COVID task force at FICCI at that point in time. And many of the suggestions we made, including a reopening matrix, was adopted in large parts by the government. In contrast, what you have here is a zero COVID policy which continued to the extent that it caused social unrest, and then you have a step back from zero COVID, which has been somewhat abrupt and which is leading to all these situations. But as I said, let's not speculate, let's not panic. There is a need for, for alertness and to be vigilant, which is what the government is doing. And as soon as we have more information, that's when one can deal with it. But from a corporate perspective, cyclical industries have deleveraged balance sheets, as I mentioned.
Right.
I mean, India is in a sweet spot in terms of where we are on the growth curve. And let's see. I'm confident in our ability to maneuver around whatever challenges there may be.
Explain to our viewers what has changed for Indian supply chains. At the time of the pandemic striking the world in 2020, many parts of our supply chain were very dependent on China and other parts of the globe. Since then, Atmanirbharta, PLI schemes have tried to deal with it on a long-term basis. Between then and now, and regardless of how this current wave pans out in China, what has changed for Indian industry and the supply chain that it is dependent on?
Okay. So, let me start out in this manner. Currently, you have a situation where the agriculture sector accounts for about 16 to 17% of the GDP, but 45% of jobs, and that is certainly something which is not tenable, right? And while we have a robust services sector which is providing a lot of jobs and will continue to do so, it is very important for manufacturing to pick up from the usual again 15 to 17% of GDP to about 25%, and that is where the concept of Make in India comes into play, and that is where the concept of Atmanirbharta, which by the way is more about self-reliance and certainly not an insular vision, as the Honorable Prime Minister himself has clarified. And in this context, I mean, some of the steps which have been taken during the pandemic, reform-oriented measures to enhance the ease of doing business and thereafter to reduce the cost of doing business are really commendable. That is number one. But I'm a very big votary of the PLI schemes because this is a very well thought through initiative which targets those areas where we are either highly import dependent or there is unfortunately an outflow of foreign exchange. I mean, for example, nature has decided that we need to import oil, but there is no need for our electronics bill to be at par or in fact even higher than the oil bill. And now, China plus one is something which was talked about a couple of decades ago. Unfortunately, we missed the bus then or didn't do enough. And geopolitics have sort of conspired to give us that opportunity again. And that is where, I think India needs to focus in a laser-sharp manner on attracting global supply chains which are looking to move out of China in order to be, have a China plus one strategy. And that is where work needs to be done. I mean, we have created an enabling environment. We have supportive policies. There are a few other areas we need to look at. For example, the concessional rate of tax for new manufacturing investments, which is the 115 BAB provision, which is currently the sunset clause. I mean, the sunset is March 2024. And at FICCI, we have suggested that it be given a clear window of 5 more years. Because, I mean, the decision to move supply chains by global corporations is not something which is done with the snap of a finger. It takes time to pull the trigger on that and to execute and to make that investment and commission it. And equally, the competitive landscape in geographies like Vietnam, Cambodia, etc., is a similar sort of a tax regime. That apart, I think. Manufacturing competitiveness in India is certainly something which has got a big boost with the national logistics policy as well as the PM Gati Shakti scheme. And I believe the government's focus on reforms and making, and attracting investment into the manufacturing sector in India to make in India for the large unified domestic market as well as the export market is something that will pay rich dividends.
Mr. Panda, before I move on to another question, a quick comment for you, for our viewers. Are we still running behind that bus which we missed earlier 2-3 decades ago? Or have we managed to board it even if we still have only one foot on the footboard?
Well, I believe we have more than 1 foot on the footboard, and when you have the Honorable Prime Minister himself making a statement that we will do whatever it takes to make sure that we climb onto the manufacturing bus. I think that speaks volumes of the focus of this government on ensuring that the manufacturing sector gets a big boost in India. And as I said, there are multiple ways that has been tackled, whether it is ease of doing business or reducing the cost of doing business, or PLI schemes which across 14 sectors, which have, if you look at mobile phones, for example, it's a live example of why there is a need for China plus one, because exactly at the time that there have been disruptions in China, you have India setting new records in mobile phone exports, and by the end of the decade we will certainly be one of the largest exporters of electronic items. And as I said, that's a live example of why there is a need for China plus one and the role that India can play.
You make a good point about China plus one, and this has been the dominant theme for the better part of this year and even since last year when it was seriously spoken about. Has the world and foreign investors started looking at India in a different way? The reason I ask you this question is that not much has been heard in terms of large scale deployment in greenfield manufacturing, at least from a foreign perspective. I completely take your point on the PLI being done for 14 sectors, and we still await granular data on that. But what about the foreign side?
Okay. So, I think certainly India is on the radar because, geopolitics have conspired to give us another opportunity, and there is significant awareness in global corporations around the world that they need to de-risk their supply chains, they need to make it more resilient, India not just presents an opportunity with its own large unified domestic market, but also to prepare to make for the world. But the point you make about a lack of large announcements, that was precisely the point I was making, that global supply chains are looking to move, but these are decisions which are not made with the snap of a finger. These are, you're talking about changing arrangements which have been in place for at least a decade or two, and there's a lot that goes into in the discussions in a boardroom of a large MNC when they decide that if we should we move out of China to some extent, if so, where? And unlike 15 or 20 years ago, when China plus one went automatically sort of India, today there are other options, because as I mentioned, there are competing geographies where where the tax regime is very is quite low, which is where I made the point about the concessional tax regime being extended for a clear window of 5 years. And that apart, there are issues like preferential access through free trade agreements. In certain supply chains, I believe about 65% of the movement has been to India, but some of it has gone to Mexico because of the proximity to and free trade arrangements with the US. Now, FTAs are something that India is, I think India is looking at very seriously. We have already signed 2 very significant agreements with Australia and the UAE. As the Commerce Minister puts it, the world is looking to engage with India, and we are too, because Indian industry today is confident, capable, is globally competitive, and we are certainly looking to engage with the world and look to benefit from having FTAs with leading economies.
Tell me, for the average viewer in India, he saw a delay when it came to automobiles. Many other components and supplies, even laptops, a lot of things that we are still dependent on overseas. In the last year and the better part of this year, there were delays, long waiting lists. Has that changed, or is the Indian consumer someone who should remain prepared that 2023 will mean further continuing disruptions because of the latest developments in China?
Yeah. So, there were significant disruptions to supply chains at the start of the pandemic and during the pandemic, and not least when you talk about cars, when you talk about electronic items, there are semiconductor chips which were, which go into all of these things, whether it's a high-end car or a washing machine or something of that sort. And so obviously that disruption has, led to a lot of, delays and long waiting lines, as you said. But I think that is changing. Again, the worst in that is behind us. At least we are not adding to the delay anymore. But for this problem to be fully solved, I believe we are still probably a year or more away. And that's assuming there are no black swan events. But the way I put it is that we have all that we have seen over the last couple of years is black swans, and I think it's time to get back to seeing some white swans finally.
Absolutely, one couldn't agree with you more that we've had enough of this, frankly. COVID is something that everyone is tired of, and we even wish the Chinese people that they sort of come out of the suffering that they have been due to various policies. I come back to the point that we discussed about foreign investment, and the question I'm asking you is, over the past several years, we have seen a large number of foreign companies exit India. The latest is a large German retailer also exiting India. In other sectors also this has happened. Why is this happening? Automobile companies leaving. Is it because the Indian market is too difficult for them? Is it a business failure or a change in competitive strategies?
I think it's, there are individual reasons for each such case, but for each company which has exited, I would guess that there are many more who are, who are looking to enter the Indian markets. And a country of 1.4 billion people, the finance minister cited very interesting data from the World Economic Forum, which is that India will soon have 140 million middle-income households contributing significantly to demand. I find it hard to imagine for any company with global ambitions to today not look at India as being integral to their plans.
Okay.
Now, why someone has exited, whether it was business failure or their inability to do something or the other, I can't really comment. But like I said, if India is not integral to your growth plans, for the next several decades, then there is something off in your planning.
Well, you make a fair point about the ease of doing business and the past difficulty of doing business in India. I turn my attention to 2023. We are on the cusp of a new year, and the economic outlook as far as the global environment is concerned is not very certain. What's your own sense about the domestic inflationary scenario? Because that's been the one big thing that we have seen. The cost of capital has gone up in India, both for industry and consumers. What's your own sense about inflation? Will we benefit in a roundabout manner due to depressed global demand?
So, let me put it this way. Inflation has been a global phenomenon, no doubt, but like I said, I think both the timing and the quantum of stimulus measures in India have been spot on, because excess stimulus measures have led to elevated inflation levels which have been very stubborn in the West. From that point of view, and of course not to mention that inflation in India was by and large imported largely due to commodities and especially oil. So with commodity prices cooling off, there has been a positive impact in terms of inflation cooling off as well. And you now finally see, consumer inflation being within the tolerance band of the central bank. But this is not something that we should declare victory too early. One has to be vigilant in terms of ensuring that it doesn't rear its ugly head again. But having said that, it's important now to prioritize growth because that is very, very critical for us. And India is acknowledged as the rare bright spot in the global firmament, and that got a little brighter with the World Bank upgrading growth forecasts for the current year FY23. But the challenge, of course, for us is the global slowdown, because the IMF numbers show a significant slowdown in global growth next year, from the present 6% to 3.2% and further slowing down to 2.7%. So that will present challenges. But I mean, equally, the forecasts for inflation are that, you know, from a peak of 8.8% this year, it will cool off to about 6.5% next year and 4.1% in 2024. So, you know, this is something, I mean, inflation is something that we have to be alert to. But India has done well with fiscal and monetary policy working in consonance to tackle inflation. And I believe the next budget, which will be the last full budget before the general elections, is something which will be growth oriented. And I was very enthused to hear the Honourable Finance Minister say that it will carry forward the legacy of this government, which I believe is reforms orientation, growth orientation, while extending a helping hand to those at the bottom of the pyramid, the vulnerable who need help the most.
Mr. Panda, as I leave you, a final question, considering the performance in tax collections, we've seen in some ways a bumper collection this year. Do you think it is time for the government to offer a helping hand to the middle class, to savers, in terms of the tax that they pay on their income and other expenses?
So look, you know, I think tax buoyancy has been significant this year, and that is what is going to give the finance minister wriggle room to, you know, to present a budget which is supportive of growth. Now, you know, how she chooses to support that growth is, you know, is an outcome of several factors which have to be taken into consideration. And but you know, when we talk about supporting growth, you know, when we talk about stoking demand, and you know, some of that will hopefully come about by way of some relief for you know, for the middle income in terms of tax rates. But you know, this is a complex exercise because I mean, when you forego by some of these measures, then I mean, you ultimately have to end up balancing the books. And like I said, there are many pulls and pressures. I mean, you have had a situation where there is a 3.26 trillion rupees supplementary budget solely focused on oil, food, and fertilizers. So let's not forget that there are many competing demands on, you know, on the kitty which is collected, and it is a complex exercise. I mean, it's very easy for us to sit here and say that we hope that it will be a budget which is supportive of growth, but there are many complex levers in there which have to be, you know, which have to be considered.
Well, that's a fair point, but we would hope, at least on behalf of the Aam Aadmi, that his Atmanirbharta, as far as his income and surplus income is concerned, gets enhanced by the finance minister come this budget. Mr. Panda, we'll connect with you again. Thank you very much for your time with us today, and season's greeting to you and your
Pleasure.
family. With that, it's a wrap on this conversation. We'll be back with more. Do stay tuned in to BTTV. As always, do like, share and subscribe and comment on our content. I'll see you again. Till then, goodbye.
Equity on your mind? Confused about what to pick and when is the right time to exit the stock? All your questions will be answered. Log on to Business Today TV.